Joining us right now is Goldman Sachs CEO David Solomon. And David, it's great to see you. Thank you so much for being here today.
Thanks for having me, guys. Great to see you guys.
I thought we could start big with this. We've had so many questions about what's happening with the economy and with the markets. And you did a better job than investors had been expecting in the fourth quarter, but it was the markets part, the trading desk, that plagued everybody out there. It was a very difficult fourth quarter. I'm just wondering if you give us an update. Obviously, the markets aren't as volatile right now, but what are you seeing? Have things stabilized, and you think we've seen the worst of the volatility?
Well, it's certainly a different first couple of weeks of January than it was the last couple of weeks of December. And it's actually interesting. I saw the statistic, I guess, the day before yesterday. If you're looking at U.S. markets, it's been the best start for U.S. markets since 1987. But that obviously was after a very, very bumpy December. There's a lot going on in the world. I think people are watching what's going on in the world. It's hard to say how all the big picture things that you guys have been discussing on the show during the course of the last 2 days are going to play out. Those can have an impact in markets. But I think as we turn the corner on the new year, people are getting focused on the forward. And if you step up at a high level, broadly speaking, while the trajectory of global growth has slowed a little bit, economy's still doing okay.
We spoke with Larry Fink last week, and he talked a little bit about how he sees things. And he said this is just a short-term call, and it depends on all the things that you just mentioned. But for now, he does think we've kind of hit that base bottom. That he doesn't expect heavy-duty trading issues unless one of those things kind of pops up in a direction that people aren't anticipating at this point.
Yeah, well, I am not good at making short-term market calls, but like everybody else, I'm watching, and I said, the underlying economy is okay. I think the underlying economy is okay. Our economists are talking about 3.5% global growth for the year, a little bit more than 2.25% in the U.S. And if you think about that as a base case, it's not as robust as people were thinking about on the forward curve last year, but it's not bad. The issue is when you think about government shutdown, you think about the 90-day deadline on trade, you think about the negotiations of Brexit, you look at some of the bigger macro issues that are out there, any one of these individually probably doesn't slow us down, but a combination of things not going the right way will have an impact on markets and will have an impact on sentiment.
But then I think the other issues you layer on top, the Ray Dalios of the world and the Seth Klarmans of the world, all of whom are talking about potential recession come 2020. When you get in the boardroom and you're talking to companies about either merging, pursuing buybacks, thinking about all of those things, is there a sense of let's wait and see what happens? And is that let's wait and see what happens, does that become a self-fulfilling prophecy in terms of slowing things down? Yeah,
so, Andrew, that's the big question is where are we in the cycle? And, of course, it's very easy to say we're somewhere closer to the end than the beginning. Could there be a recession in 2020? There could. I think the chance of a recession in 2019 is relatively low. Our economists put it at 15%. But if you're running a company, when you're in the boardroom with a CEO and you're running a company, CEOs can't manage their business saying, what if there's a recession in 2020? They've got to look at their plan. They've got to put forward. They've got to expect that there's going to be some volatility in economic activity. But CEOs aren't very good at kind of looking 18 months, 24 months, 36 months out and saying, what if? They're better at saying, okay, what are the factors I have at my disposal today? And how am I going to manage my business?
People are thinking even longer term. There are so many CEOs we've had on this very set talking about how they now need to think about their supply chain for the next 10 years in a way that they would have never even thought 12 months ago.
Different topic. I think there are macro issues that are affecting how people invest, where they invest, how they think about their supply chain.
But that goes also to what company you could buy, acquire, merge with.
Of course it is, but that's different. I was answering the question really in the context of worrying about a recession. There will be a recession at some point, whether it's in 2020 or it's in 2021 or how the cycle runs. That's not a big factor in the context of CEOs thinking about exactly the things you're talking about. What's my 3-year plan? Where am I investing? What markets are most open or most accommodating for what I want to accomplish? What are the big picture supply chain issues I have to deal with? Those are the things.
Do you think China's eventually going to want to supply all the elements of the supply chain, and somehow you can only hold out for so long until they want to be part of the
There's no question.
Supply chain will be intact again at some point. David, what about just the global debt versus global GDP, which we now know is over 200%. I don't know what it is, but it's bad. It's high. But when I think about it, inflation and currency debasement hasn't been our big problem recently. It sort of has. It's been sort of the opposite. We've been worried about deflation and the horrible things that that's probably worse. I don't know. They're both bad. Can we handle it? Is that looming, or a little bit of inflation wouldn't be the worst thing in the world right now? I don't think.
Yeah, look, I personally agree with you. A little bit of inflation would not be the worst thing in the world right now. I do think when we think about big picture concerns that we're concerned about, and we think about places where there are financial imbalances and where there are risks, we're certainly thinking about the growth of debt in the world, particularly the growth of government debt, all over the world. And so that's definitely an issue that's out there.
That number one?
I don't know if it's number one, but it's one of maybe a few that certainly we're
finally
focused
seems
on.
to get you. I mean, I'm talking about a recession. I'm trying to think of why else are we things don't die of old age. We say that all the time. Yet it has to be usually a policy mistake or an economy overheating or something. So I just...
Well, we recently put out a research report that talks about, if you look historically at recessions in the U.S., the 5 things that can lead to a recession. Some of them, like oil shocks or industrial disruptions that were largely due to inventory rebalances, things like that, less prevalent given the way the economy's evolved. But then you get into things like an overheating and inflation. Doesn't seem like that's on the radar screen now. Financial imbalances and a tightening cycle. And so we're definitely in a tightening cycle.
Are we? They might have stopped already.
They've definitely slowed, but if you listen to our economists are more in the view, they're a little bit more hawkish with respect to next year. In other words, they agree that we're slowing down, but they'd probably say two hikes next year as opposed to
tightening the balance sheet itself is tight.
Tightening the balance sheet is definitely
That's true, but the 2020,
moving towards that.
2020, the recession forecast, I don't know if that's any better than, I don't know if their guess is any better than my guess at whether 2020 is a recession. Do you think that, what do you think do you think it's better than 50-50 that we have a recession next year?
In 2020?
Yes.
I would have told you if you asked me 15% this year, 50% next year.
50. So 50. You think it's even, see, I think that's high. Maybe it's possible.
50% next year being 2020, not 2019, right?
Yeah, meaning 2020, not 2019.
2020.
Yeah. 2020, not 2019. But part of that is, and I said it before, I'm not good at predicting these things. I'm better at looking at the facts that we have and trying to manage
purely
it
based purely based on how long the cycle. That's what all these things are coming from, is that we're due. And I don't know
Yeah, I think your point's a fair point, and I wouldn't be tremendously surprised if this cycle ran longer than everybody expects. And one of the things I'd say also, Joe, that's interesting, generally we don't worry ourselves into a recession.
Right.
There's really no precedent for that. Well, everybody's saying that we
Everybody comes to Davos. If we stay here, we're going to have a recession.
But historically, we haven't.
But one of the reasons it's so interesting to talk to you and why we're so glad to have you here is you're talking about this as a CEO who's looking at investment, who's looking at other companies making investment, who's looking at mergers and acquisitions. But you are so good at risk assessment and what that means for how you play that in the market. So how do you take what you can best guesstimate on this and then play it safely in the markets? How do you end up doing that?
Well, our whole franchise is focused on our clients. And so whether we're dealing with corporates or we're dealing with institutions, we're intermediating risk for our clients all the time. And part of that is affected, by our own risk view. I would say at this point in time, you have top down, bottoms up. And both, I think we're more cautious around risk based on where we are in the cycle. But that doesn't mean that the cycle won't run for another 2-3 years. And it's our job to be in a position to serve our clients. And our clients are active at the moment because they're trying to wrestle with us. I know that we get a lot of attention around the cycle and when there's going to be a recession. In the short term, thinking about 2019, we're much more focused on these big governmental issues and whether or not they have the propensity to really disappoint markets and therefore change.
I'm going to be 49-51.
49-51?
51, no recession?
Yes.
Yeah.
I got to ask you about a government issue, but it's a different one related to your firm. You took a $500 million reserve, legal reserve, against this one MDB issue. Talking about risk, assessing risk. How did you come up with that number?
So when you file financial statements, you work with your accountants, your legal team, your auditors to make an assessment of what's the appropriate reserve. Like any other company, we have information at our disposal, and based on that information, we made the assessment that we, our auditors, our legal team, felt was the appropriate assessment based on that situation as we're working through it.
Right. But for investors who are looking at this stock and trying, there are some investors who are betting that number will ultimately be more. There are other investors that are really hoping that the number is actually a lot less. And what do you tell them?
What I tell investors is the same thing that I said on our earnings call. This is something that we're working through. We're managing through the process. On our earnings call, I raised the point that we're spending a lot of time trying to look at and understand and think about the fact that we had somebody in our organization that we hired and promoted that actually became a criminal, along with leaders in the Malaysian government, Joe Low, other people, and what's a very, very significant financial fraud. and we're reflecting on all that. We have to resolve this, and we're going to resolve it in an appropriate way, and we're going to work through it. In the process, there's a process to it.
Clients and prospective clients ask you about it?
Absolutely. Clients ask us about it. We're very open to talking about it. I don't see it affecting our client franchise in any way at this point in time, but sure, clients ask us about it. We talk to them about it. And, my job, my role in setting a message inside the firm, but also with our clients, is to take ownership of the parts of it that we're responsible for, but also make it clear, as to, what we think the facts are to the best we can. Most of that I've said publicly, so I don't think I have to say a lot more about that now. But also to let people know we're focused on resolving it. More importantly, we're focused on our clients, we're focused on our business, we're focused on our strategy. And I think some of that came through in the earnings call, and I think the market appreciated that.
Is it fair to say, though, I think of you guys as being pretty conservative in terms of making sure that you're going to be looking at things from the broadest perspective. I would think that you'd be taking a big number just because you're conservative and you want to make sure.
When you're dealing with our financial statements, we're always conservative and doing the right thing and working with our auditors and our lawyers. And so I feel good about what we've done and, based on the facts that we have today.
Okay, I got one final one for you. So you've been now the CEO for 3 months?
4 months.
Okay, so biggest upside surprise, and take one MDB out of it, biggest downside surprise, honestly, on both ends.
The biggest, if you take the situation with Malaysia aside, the biggest upside surprise has been, I knew this was a great organization. I knew we had great people. I knew we had great opportunities. But when suddenly you step into the position of leading the organization and you can feel the organization really rallying behind the direction that you want to go, that's endorsing. And I'm incredibly optimistic about our firm, the things we can do for our clients, our client franchise. I get around with clients and I listen to clients talk about the firm in a much broader way in this position. And I feel good about all that. Downside surprise, it's a big, complicated organization. And while I've counseled CEOs for a long time and have had a lot of CEOs talk to me about what it feels like to be a CEO, and you feel a little bit lonely and a little isolated and information flows are different, I thought I understood that. When you sit in the seat, it's really different. And so I'm sitting in. I'm going to do the best that I can for Goldman Sachs.
When that 2-week check comes in, I think you feel pretty good, though, don't you?
Well, we do the best we can every day for our clients, Joe. That's what we do.
David, time management, is that the hardest thing to have figured out before? I guess you're not spending your time exactly the way you thought you would. Maybe some projects take more.
It evolves a little bit, but I think any executive has to have a high level view of how you're spending your time, and a high level, I think about a third of it on strategy, a third of it on our people, and a third of it on clients. And you have to evolve that based on things that are thrown at you. But I do think one of the hard things for any business leader to do is a lot's thrown at you. What do you say yes to? What do you say no to? And you've got to be better at saying no to things that aren't really relevant for your core mission or what you're really trying to accomplish for the organization.
That's great.
I think if you didn't have to do anything, it'd be like, what is this for? I mean, it's a few things. You got to make a few decisions.
One of the things I find, we're making decisions every day, and I'm very, very lucky to have an incredible team. I feel very good about the team we've put in place. But there are decisions to make.
When you got the nod, you went, yes, right? Didn't you? Huh? Come on.
I was excited to have this.
And we were excited.
I'm excited to have this opportunity.
Am I right or am I right, Sorky? What do you think? Huh?
You did the what was it? What was the thing? The Yuzu. Now what's the car? Isuzu.
Oh yeah. That's an old ad.
You heard me talk about doing the Joe Isuzu. I mean, that kind of dates me a little bit. Joe and I are roughly.
Because we know what you're talking about.
I know what you're talking about.
Okay, you heard about it sometime later in your life.
Can you do that thing that people do now, that dance?
No, I can't do
slide.
I can't do that.
Can you do that?
No, you mean the floss.
Yeah.
Oh, the floss. Right.
Did you do that?
I'm not a good dancer.
No.
I can't.
But
you are a good DJ.
But
I am a DJ.
Do people do the floss to your music?
They do a lot of things, but I can't say I've seen a lot of them do the floss. But I'm going to be looking more carefully the next time I DJ.
Jake, did you prepare him for every one of the? You did, didn't you? Because
Jake prepared me for everything, but not the question about the floss. Okay? That was not in my preparatory notes.
That was actually not in ours either. That was
that's good. I'm glad you guys came up with it.
Okay, good.
David, thank you. It's really great to have you here.
Absolutely. Great to be with you guys.
Appreciate
it. Thanks for having me. Thanks a lot.
David Solomon.